to see you.
Right.
It's up to Rock to allow me to be seen. Hello?
Hello.
Hello?
Morning.
Hi, Valeria.
How are you?
Fine.
Good?
And you?
Yeah, good, very good. So,
Okay.
everybody's online? We can start?
Yes, let's do so.
Yes? All right. Rock, you have the floor. Rock?
I think you're muted, Rock.
Okay, yeah. Thank you, Ed, for reminding me.
Hi, Rock.
Yeah.
The floor is yours.
Okay, yeah. A very good morning for our participants from the Europe and the Middle East, and a good afternoon for us from Asia Pacific. Thank you very much for all you coming to this webinar jointly organized by the International Society for Energy Studies and the Global Gas Center. ISETS is a recently formed group in order to provide a platform for dialogue among academic, industry, government, NGO, and others to facilitate energy transition studies. Our purpose is to share knowledge and organize events like this in order to inform the public about important issues in energy transition. And for today, we are very pleased to team again with Global Gas Center, which we jointly organized a roundtable last June on hydrogen. And this year, we are planning for the first one to discuss the role of natural gas. When we planned this event, we didn't expect a lot more dynamics that happened in the past few months, but we did. When Valeria and I planned this one, we noticed the significant increase of gas price in the global markets. We think it probably will be very interesting to discuss how these kind of new paradigms in the gas market and how that will be affect energy transition. So that's how the topic come into this. And for today's meeting, we are very pleased to have a lot of distinguished guests from industry and research and others to come together. And for my part, I think I will now introduce Mrs. Vanari, the Executive Director for Global Gas Center, to give the welcome speech. Valerie, after that, probably you introduce Glenn, and I can later introduce Dr. Sun Xianzhen later. Yeah, Valerie, the floor is yours.
Yeah, thank you, Rock. Thank you, Rock. On behalf of the Global Gas Center, it's a great honor to welcome you today for our webinar co-organized with our colleagues from ISETS, and especially Mr. Rokshi, you just seen him, with whom we work in a very collaborative and efficient manner. I would like to thank all the speakers who have accepted to share their views on the Asian gas markets and the consequences of what's going on currently in Europe. We will also have an insight from the Middle East with one of our experts based in Lebanon. Some of you have slides, some not. I would be very grateful to all of you to speak loudly and articulate well so that everybody can hear and understand you well. That's very important. After each presentation, we will have the time for questions and remarks, and for the participant, they will have the possibility to ask questions on the chat. Now it's time for the opening remarks, and I give the floor to Andrew Walker from Cheniere. Andrew?
Thank you, Valerie. I'm going to share my screen because I do have some slides for my opening remarks. Thank you for those for that very kind introduction, Valerie. Rock. Over the next 10 minutes or so, I'm going to make some opening remarks with the objective of really setting the context for the discussion, for the keynotes that will follow me, for the discussion hosted by Christoph. And really, I always see the opening remarks as an opportunity to kind of ask more questions than give answers. I'm gonna watch with interest the discussion to see what answers come out of the session. Because we are a New York Stock Exchange listed company, I do have to draw your attention to the fact that my comments are made under our usual safe harbor statement. So as Rock indicated just now, I think we have gone through a paradigm shift, and I think you can see that relatively clearly if you look at the price indicators for global gas and LNG over the past decade and a half or so, the time in which we've kind of followed spot prices, JKM in Asia, obviously the spot price for LNG cargoes in Asia. I've also plotted crude oil parity for a comparison. I've shown TTF, the spot price in Europe, and then the spot price in the US Henry Hub, obviously. And in LNG, which is the area, obviously, that Cheniere tends to operate in, within LNG, we've got used to, in that time, in terms of thinking of supply cycles, periods in which LNG is growing faster or more slowly, generally about 4 to 5 years long. And you can see at the beginning of this chart period, 2010 to 14, we had a tight market, supply growing slowly. 2015 to 2019, we had a loose market, supply growing much more rapidly, particularly as US and Australian volumes came on. And then you can see the pattern gets disrupted. And back in 2010 to 2014, we thought that 15 to 20 range for Asian LNG spot prices was particularly high. But you can see that was nothing in comparison to what we've seen in the marketplace recently. And I think we've seen a confluence of 4 different factors that have really disrupted the market, disrupted the shape of the market. 2020, the global pandemic, the significant reduction in demand that we saw, the unprecedented reduction in demand. And we're still, I think, as China is reminding us at the moment, living with the pandemic. We're still on the exit track from the pandemic. There are still impacts on the global system, economic system, and demand system. 2021, we saw the price crisis in the second half of the year. We saw a really rapid rise in gas prices, spot gas prices, both in Europe, both in Asia, to unprecedented levels. And this chart, for simplicity, is showing the monthly closing price, but actually the daily records, if you look at the top, 84.76 for JKM, $72 for TTF, unprecedented daily prices. And that was really before we saw the third of my kind of features, the war in Ukraine, which has created another level of uncertainty on top of those already high prices. And in the background, we still have the energy transition, the commitment by governments, by society to transition energy to a lower carbon form, a lower impact on climate, significant governmental commitments made at COP26 recently. And I think we're all familiar with the wide range of outcomes that are possible as we move through the coming 2-3 decades, both for primary energy that plays through into gas demand, that plays through into LNG demand. Now, against that uncertainty, and I guess we're all companies are currently processing what does this mean in terms of our beliefs about the future. I think at Cheniere, I would say there are certain elements of our expectation, outlook, that I think are unchanged despite the current uncertainty. We still have a belief that we will see robust growth, long-term growth over the next 2 decades and probably beyond in terms of LNG fundamentals. Significant additional supply will be required. For us, the role of gas in the energy transition, gas has a positive role in the energy transition, and that drives obviously some of our belief. We see 3 pillars that support gas's role in the energy transition: displacing less clean burning fuels, particularly coal in Asia, enabling renewables, balancing the intermittency of renewables, both on a short-term basis, but also in terms of seasonal demand. And then as a platform for future low carbon gaseous fuels, hydrogen, biogas, syngas, and of course, let's not forget natural gas with CCUS. And that, I think, plays through into a strong growth for LNG, particularly in Asia. Asia has been the engine room of LNG demand growth for the length of for the whole history of LNG, pretty much. And we continue to see that. We see rapid growing primary energy demand in Asia, driven by high growth economies, playing through into significant gas demand, playing through into significant LNG growth, particularly in South Asia, Southeast Asia as regions, China, the top 3 kind of growing elements. So having said that those facets remain the same, what has changed? And in front of me, I've got a list that I've kind of sketched out as I've thought about this. You know, how could recent events drive structural change in the natural gas and LNG industry? And these are some of the areas I expect we'll hear about in the discussion. Are we, as we see Europe go through a paradigm shift in terms of its relationship with Russia, its geopolitical relationship, its energy relationship, are we going to see a segmentation of the global trade? We've been on a track of globalization. Are we going to see that reversed with Europe and Russia disaggregating their supply, Russia having to reorient to other markets? I think we're inevitably going to see a period of high gas prices as we go through a rebalancing in the market. Are we going to see permanent demand destruction, particularly in price sensitive areas due to that? Are we in a high price environment going to see a faster energy transition, a faster move away from gas? Europe particularly signaling that that's one of the ways it disengages with energy supply from Russia. As a result of that, are we going to see a dash for infrastructure? We're seeing, well, as a result of near-term focus on security of supply, I guess, we're seeing a dash for infrastructure in Europe, a dash for LNG import infrastructure. Or are we in some markets going to see a return to coal with high gas prices, a gap between the implementability of renewables causing a return to coal? And certainly there's an expectation that 2022 may be a record year for coal burn. Are we going to see a return to an interventionist marketplace? We're seeing Europe talking about governments, the European Commission starting to jointly procure supplies, a government intervention in a way that we've not really seen in the kind of growth in the free market. And finally, are we going to see a change in the role of Europe in terms of the LNG, the global LNG model? Europe has been the balancing market for LNG for pretty much as long as I've been in the business, which is a long time. Europe was the market, so-called market of last resort. It was the balancing market where you could push supply or pull supply into other markets. It's moved from that, it's upended that model, I think, and really at times, and it is currently the market of greatest need. So that balancing role is starting to change with impacts in terms of how the global system works. So that's really my thoughts about some of the things, some of the areas we may have been impacted. I'm going to pass back to the chair, Rock. It says questions, but actually I forgot to take that off. I'm not expecting questions, although I am happy to answer some. So thank you. That's my kind of opening comments to set the scene for the forthcoming discussion.
Yeah, I think, Andrew, thank you very much for leave the stage. I think those are style factor we all know, but we don't know the nuance and the details. And I think those will be critical for our future discussion. Andrew, will also stay and join our panel discussion later on, right?
Yeah, absolutely. Sure, that's fine.
Okay, in that case, so Valerie, probably we will leave the discussion later on, including question among our panelists. I even have a question, but I will reserve for later on. So we will agenda. So our next two keynote presentation. One is from Professor Sun Xiansheng. He is currently the chairman for the ISETS Council, and he has probably more than, I think, more than 3 decades experience in oil and gas. And before the ISETS chairman role, he was the executive director for International Energy Forum. So, Professor Sun, I leave the floor with you. You are mute. Yeah. Okay.
Can you hear me now?
Yeah, no problem now.
Okay. So, Mr. Chairman, ladies and gentlemen, good afternoon now in Beijing, China. So it's a great honor for me to join you to learning and sharing the comments and some of the considerations about the gas. After the COP26 in Glasgow, in about 5-6 months' time, and a series of swings happens for the geopolitics, and these issues have the big impact for the energy production, marketing, and also for the future development. And for this, I feel that because of this issue, make the international energy, the supply and the demand intense. And according to the IEA, the director by the bureau, that the sanction, the causes in the April, Russia's the supply for the gas. So per day is about 3 million barrels. Of course, the gas is even more serious than this situation. So by this situation, for the prices of gas and also for the crude, will in the higher the level. And also by this situation, so by the new energy, renewable, and for the Europe, by this the war, the EU will make the great efforts to increase the development of the renewables for the energy security and also for the future development. And I think this is one of the important issues that happened in the past almost a half a year. And another one.
Sorry to interrupt you. Your slide is not moving. I think you probably yeah. It's still the first page.
Yes.
Okay. Now.
And now still the first page. And I just put that Now for the second issue, I feel that is the covered the pandemic situation, and some of the cities in China pulled up. The reason is Omicron, the XE is the most transmissible the variant. It's a very serious situation now, and so by this reason, and some of the big cities and some countries all have the negative impact. This causes the uncertainties for the energy supply and for the market. So I think these are the major 2 issues. And for the, according to the recent IPCC's report in April, so by 2010 to 2019, the international, the global temperature come to the historical high. So if the control of the emission of CO2 now there, and then the target 1.5 degree cannot be completed. And so because of the natural gas, the rich resources, and also because of clean technology, so it's a most reliable energy for the renewables. And by this slide, you can see that by 2040, and the natural gas will come to about 4.8 trillion cubic meters. And this is the data from China ETRI. This is the Economic Technology Research Institute of China National Petroleum Corporation. So by this, we can see that this will increase about the 40% compared with the 2015, and also the gas used for the power electricity is about 2.5 trillion cubic meters. So that's an increase about 91%. So this take about the incremental part is about the 52%. So also by 2040, the technology, the progress, and also some of the new energy like the hydrogen, and also the energy efficiency, and some of the renewables development. So the gas start 2040. Now by these slides, you can see that start to decrease. So that's they show that we can see that the gas role is non-replaceable in the main force during this medium, even long time till the 2060. Yeah. So by this the slides, we can see that some of the countries, they are for the flexible adjustment of the electricity, and it's very difficult. And this one we can see that United States is better, 47%, and the German 19%, and Japan is a little better, 31%. China is very weak. That means if you need and then cannot meet the requirements. So the natural gas, so can play the better role. So this slide, sorry, I'm lazy. I didn't translate into English. But this one you can see that the different strengths and the weakness from the coal, from the water, storage, and also for chemicals storage, and also gas power. So we can see that the gas has its strength. It's more convenient, more easy, more reliable, and more efficient. Use a backup the capacity. So by these slides, also we can see that this is the oil production and consumption. And for this one, shows that the US, Saudi, Russia, and China, this is the major oil production the countries. And for the especially for the United States, Saudi, and Russia. So by this one, if there is some of the big change for this, and then it will cause the problem for the world. Of course, by this we can see that these three countries, US, Saudi, and Russia, is almost the 10 million barrels producers, and China is a more than 10 million barrels consumer. So that's the major the structure of this oil, the supply and the consumption. So this shows natural gas production and consumption. And by this one is different. Is the US and the Saudi, and also the Iran is the Russia here. And Iran, of course, is one of the producers for gas also. But this one, and I think the Russia also plays an important role for this. And so that's the general information by this. The record of US LNG export is supervised by the high international gas prices in Europe. Europe energy crisis with the historical low inventories and the geopolitical tension have made the US LNG profitable in Europe, and where prices are now around 6 times higher than US benchmark Henry Hub. US LNG exports are soaring to the record level and expected to continue to surge as more export capacities come online due to the increasing number of LNG export products put in service. So that's by the end of this year. So I think that US production and export for gas will further increase. And now we can see that the Russian production for the gas is about 638.5 billion cubic meters, and export is about 227 billion cubic meters, and the export to Europe is 155 billion cubic meters. So by this, we can see that the Europe each year will import a lot the oil and gas from the Russia. So now the policy for the Europe and for the is no new contract for the Russian for the oil and gas, and especially no spot. And of course, for pipe gas, by the existing contract is still going, and for no new FID. So that's the situation. Of course, there are some of the options for the EU to enlarge the import from the United States, from Qatar, from Australia, and other countries. And of course, also they can to reduce the consumptions. And the IEA forecast that if every family in Europe and they reduce 1 degree, and then they can reduce about 6% of the import from Russia. And of course, they can use the coal, use the wood and others, but this will have the challenge of the CO2 emission. So by this, we can see that under such a situation, the challenge for the Europe and other countries is big. So by the time reason, so I quickly to come to the conclusion, and the unique role of the natural gas in the energy transition is non-replaceable in the short and medium term, even for long term. So this is the my comments. And also the issues of energy transition, climate change, economic development needs a peaceful international cooperation. So I expect some of the questions discuss with you in the future later. Thank you very much.
Thank you, Dr. Sun, for the more detailed discussions. I think I forget people, we will be very happy to see that gas will have a non-replaceable role in the energy transition. I think it's consistent with Glenn's comments as well. Now we will probably hear the second keynote speaker from Minna. She's the acting vice president for energy aspect. Minna, the floor is yours.
Thank you, Rock. I would like to first share my screen with all of you. Hopefully you can all see my screen. Good afternoon, good morning. My name is Min. I'm with Energy Aspects and I look after the global LNG markets. I'm based here in Singapore. I'm very happy to be part of the discussions today. I understand most of the panelists and keynote speakers will talk about gas role in the energy transition and some high-level policies and long-term outlook. So my keynote, I will focus on the fundamental of global LNG, supply, demand, prices, spreads, and to share my view on the short-term outlook. Hopefully this will help set up the stage for our discussions and conversation later so that we can not only look at the long-term energy transition, but also keep an eye on the short-term implications of energy transition and energy policies. So the global energy markets have been pretty much TTF driven since the second half of last year. And there are various reasons behind. So in terms of how we get here, just to name a few, we had a strong economic rebound globally, colder than normal winters across Asia and Europe, weaker than expected non-thermal generation, and a combination of high coal and carbon prices, and some supply issues from both LNG and pipeline gas, so from both sides. So therefore, TTF has been priced at least at the top of the gas to coal fuel switching curve in Europe since then. So that implies Europe maximizes coal and minimizes gas in its power sector. And I expect sustained high TTF for at least the next 2 years, given the tightness in gas markets in Europe and some big uncertainties and volatilities around the current geopolitical conflicts. So the top of the coal to gas fuel switching curve essentially provides a floor for TTF, which ranges from 83.85 to 100 euros per megawatt hour. So this is a price environment we will be facing for the next few years down the road. Given the natural short position in Europe essentially the world needs to reshuffle and rebalance not only for gas but also for coal. So the next question I think Andrew also mentioned earlier is how will Asian buyers, Asian clients react to this heightened TTF price environment? Are they going to keep beating up the JKM? So we will still have the JKM premium, or are we going to see substantial demand destruction here in Asia? That's JKM disconnected from TTF. So to answer that, we have stacked up Asian or really Pacific demand and supply balances. So we first have this JKM demand, which is essentially Asian demand plus Middle East demand. So essentially east of Suez. And we stack up supply from different regions that will head to Asia as baseload. And from bottom to top, they are ranked based on proximity to core Asian markets. So I think Asian LNG demand has definitely shown signs of reacting to the high price environment, with buyers largely avoiding the spot market over the past few weeks, even months. Our Pacific LNG balance now shows almost no need for cross-basin LNG spot cargoes at the margin this summer, but Asia will pull cross-basin spot cargoes, especially from the US, over the peak winter heating season. So this dynamics means it's very likely that the current JKM TTF spreads on the curve are undervalued, because it is even pointing to marginal Qatari, and for some months, as shown on the left chart here, for some months, even Australian cargoes should head to Europe instead of Asia, based on the economics, taking considerations of freights and different trading routes. But in reality, I think it's less likely to be the case for Australian LNG to head to Europe. Therefore, I think Northeast Asia spot cargoes can price broadly at parity to the LNG prices, gas Northwest Europe, for most of the rest of this year, before the JKM climbs back to premium to TTF in peak winter months, when Asia needs to call on cross-basin spot cargoes, especially from the US at the margin. As a result, I think both TTF and JKM will remain high. It will likely to be above or around $30 per MMBTU this year and next year, and then drop to mid to high 20s in 2024 and even 2025. So that's a quick view of the high price environment we will be facing in the next few years. I think it's quite clear to all the panelists and audience that we are in a time of structural tight market, because we had a big wave of LNG supply addition during 2016 and 2020, and we will have the next big wave of new supply coming online 2025 to 2028, which will be dominated by the US projects and the Qatar expansion. But in between the two big waves that essentially now, like 2021 to 2025, it's just we don't have many new projects coming online due to less FIDs achieved a few years ago. So this is an important underlying factors that you don't have many new projects coming online, but demand is keep growing. The US, so short-term speaking, the US remains the main driver of new supply, with we forecast another 12 million ton year on year this year, primarily from Sabine Pass Train 6 and Calcasieu Pass. In addition to US, it's just a few new projects, including the FLNG of the coast of Mozambique. So despite there are few new projects coming online this year, we forecast global LNG supply will grow by 32 million tons year on year in 2022. That's very strong growth because in addition to new projects, we expect some improvements from existing projects. First of all, existing producers will produce as much as they can just to take advantage of the current high gas price environment. For example, the top 3 producers, Qatar, US, Australia, produced at record high levels in the past winter, especially in January. In addition, we expect to see significant volumes in incremental output coming from exporters that underperformed in 2021. As we mentioned earlier, that was one of the reasons of a tight global LNG market. So that a number of projects underperformed due to either upstream issues or issues at liquefaction plants, like Trinidad, like Nigeria, like in Indonesia, so on and so forth. And these countries have been making every effort to fix their upstream or liquefaction issues so that they can quickly ramp up production this year, again, to monetize their produced cargoes. So we are forecasting very strong global LNG supply year on year this year. Last thing I want to highlight on the supply side is there is a risk that supply will undershoot our forecast if problems that caused underperformance last year at some countries are not rectified, are not fixed. Remember, we forecast very high prices over the next few years, like $30 per MMBTU, TTF and JKM this year and next. Those forecasts are based on strong supply growth. So any downside from supply will put some additional, like more pressure on gas prices globally. The last part of my keynote is on global LNG demand. Demand growth, excluding Europe this year, will slow down significantly. So last year, just give you as a context, China LNG imports grew by almost 13 million tons. South Korea gave you another 6 million tons. Brazil gave you another 5 million tons. So just these 3 countries combined added around 24 million tons of LNG demand last year. We won't see that kind of growth this year. Northeast Asia, all the traditional like the JKTC market will largely remain flat year on year because of high gas prices, some COVID disruptions, as Dr. Sun mentioned, and higher non-thermal power generation across countries. For South Korea, the nuclear generation will be much higher year on year this year, and that will eat into gas share in the power mix. Beyond the traditional JKTC markets, we will see some growth from pockets markets this year. And the one that is high on my watch list is Thailand. I think we will see quite strong growth from Thailand in terms of LNG demand this year. So putting all these pieces like I've just described together, we will have a very strong global LNG supply, and Asian demand growth will slow down this year. That means more cargoes will be available to head to Europe. So Europe can get a big jump of LNG imports this year. We expect European LNG imports to be up by almost 26 million tons year on year in this year. So the total will reach 100 million tons for the entire Europe. The big LNG numbers will definitely help Europe to a certain extent, but it won't solve the fundamental issues they're facing. And there are some big risks there. For example, Asia may increase its call on more spot cargoes, US spot cargoes, if the region has any unexpected disruptions in like other generation sources, like nuclear in particular, or any weather risk. If Asia is going to have a very hot summer or very cold winter, it will just increase Asia's call on cross-basin spot cargoes. So I think I've spent like 10 minutes as scheduled to talk about the global LNG fundamentals. Hopefully this will give you all some context and background on what has happened and what is going to happen in the global energy markets in the next few years. So I will just stop here and pass back to Rock.
Yeah, thanks, Min. I think you raised a few questions that will be discussed. Valerie, can I invite you introduce Chris for the coming roundtable discussion part?
Maybe we have 1 or 2 minutes regarding what was said. Do we have a question or comments from the audience? Not yet, so we will have the discussion at the end of the panel discussion. That's all right for everybody. So I will leave the floor to Christophe Mahler, who is currently in France and who will introduce his speaker. Christophe, do you hear me well?
Very well, Valerie.
All right, the floor is yours.
Thank you. So first, I would like to thank all the speakers for their introduction remarks, and Andrew for the many questions. You remain open during your presentation. What I want to do, because we have a few panelists, I will invite them to share their views, and we will dive straight afterwards into question and discussion. Because of the time constraint, I will invite Dr. Naji to, where are you, Dr.
Thank
Naji?
you, Chris. Thank you so much.
You're here.
But if they can allow me to start my video because I was disabled. I don't know.
So
why.
Dr. Naji is the Chief Operation Officer, Petrolab, and Senior Advisor for Middle East Global Gas Center. Dr. Naji, would you want to share your views on the role of natural gas?
Thank you so much. Mr. Chairman, thank you. And thanks for the organizers for the invitation, especially the Global Gas Center. I will focus today my talks on Qatar and its role in supplying LNG in the short and long term. I will not talk so much about energy transition. My focus will basically be on Doha and its LNG capacities. As you all know, almost every country in Europe, especially in Europe, want now to secure alternative oil and especially gas. And the main focus has been on Qatar to supply more gas. Already in 2007, Qatar has been the leader, has become the leader in LNG production with a huge liquefaction capacity of 77 million tons per year. Recently, Qatar decided to implement a two-phase expansion program, which will boost its LNG capacity, first by 33 million tons in 2026, and an additional 16 million tons in 2027, when it will reach a total annual capacity of 126 million tons. Let us keep in mind that the new LNG capacity of Qatar will come on stream only in 2026, 2027. The main question now is, can Qatar today provide additional LNG to Europe in case of any supply constraints? In fact, to substitute for any disruption in Russian gas supply to Europe, Qatar could well play a role, but from now I can say that it will be a very limited role. Indeed, Qatar is now producing at near maximum capacity, with much of that supply already tied up in long-term contracts. If Qatar was to send all its uncontracted supplies to Europe, the total would be not more than 100,000 cubic meters a day, representing really a mere fraction of the Russian supply. It is true that between now and 2026, some Qatari LNG long-term contracts will expire, totaling around 14 million tons per year. But almost 50% of these volumes have been allocated to European markets and will most probably be renewed. Therefore, only 6 to 7 million tons of additional Qatari LNG, if any, could be reallocated to European markets before 2026. Therefore, and considering that from now till 2026, 2027, very minor additional LNG could be supplied by Qatar to Europe, there is an urgent need to convince Doha to reroute some of its current LNG supplies from Asia to Europe. This is the same way it did already in 2011 by rerouting LNG to Japan after its tsunami. We can see that Washington is aggressively facilitating discussion between Doha and its Asian LNG buyers to discuss the possible release of some cargoes to Europe. But rerouting LNG cargoes would require to compensate Qatar and the client countries in Asia, which are not likely to be pleased by getting less LNG than planned. Anyway, to divert cargoes from Asia to Europe, Qatar is seeking guarantees that its LNG would not be resold later outside Europe on the spot market. Doha is also asking the resolve of a long-running European probe into its LNG long-term gas contracts. However, potential discussions on this item, specifically, could prove to be extremely difficult as they go to the core of the liberalization of the European gas market. But we have to see how the recent developments in the market, as well as the energy transition policies, will impact this gas liberalization in Europe. With all that in mind, it's clear, for me at least, that Qatar has no magic wand to fix the shortfalls in European gas, and that there are many challenges to overcome in order to get just a tiny LNG assistance from Qatar. Thank you so much.
Thank you, Dr. Najib. So indeed, a limited role of Qatar in the short term, at least not before they have additional capacity online by 2026. All right, let's move on to the next panelist. Glenn, I would like to give you the floor. Where are you, Glenn?
Chris, Glenn has a technical problem to log in our system. We have tried a few links. He couldn't for some reason, even with his phone. So he's died with phone number, but okay. I think he cannot speak. Very unfortunate. Yeah.
All right, let's move on to Sam Moraki. Are you online?
Yeah, also didn't see Moraki.
Okay, well, we have another speaker panelist with Professor Yufeng Yang. Can I give you the floor?
Okay, good afternoon.
Yes. Good afternoon. Just to introduce you, Professor, you're Senior Fellow, Energy Research Institute, Peking University.
Yes, thank you. Very much happy in this webinar. And thank you very much, especially for the organizers' roles. And here I just would like to share my views, several views on this topic. First view is For the energy transition, I think in the field, in the world, not only the Europe or Asian market, any market, from coal to gas, this is very important. This is a longer term, just because the carbon emissions is just a half, very simple. And for China, in fact, even in India in the field, maybe it's difficult because, especially short term, because the coal still a major fuels and the gas still expensive here. The second view, for the oil, the high oil price scenarios, for example, it just will must drive its change into the e-vehicles, electric vehicles. This means from the oil to electricity. But there is the electricity, clearly renewables and the traditional coal and gas power generation, both of them, no doubt. But for the electric vehicles, we need more electricities. This means for the electricity in the field, they are highly related with the energy securities. The energy security will must influence the energy transition process. Definitely, everyone know. So the electricity, where is the source of the electricity? We all thought in the near future the renewables, but clearly now, because of the different countries, different situations, situations of energy securities. So it's very difficult, I think, myself think, for the near field, especially related to some key technologies, for example, energy storage, like that kind of very, very crucial technologies. And the final, I would like, near this year, everyone know the energy market, it's a very, very low, the price is a volatility, especially oil and gas in Europe, especially. I myself think in the short term, EU still have a large requirement of the gas and oil, especially gas, I think. But longer term, in the Asia Pacific regions, especially China and India, like this kind of huge population countries, and will have a big market. I think maybe a large demand. I mean, so no doubt, the gas. There are different organizations estimation or projections around 2030 will become going to the peak year for the gas, but I don't think so. I think maybe longer. I mean, so gas is no doubt is still golden ages, because many reasons, flexible and easy, and LNG and etc. So this world, I mean, energy security, climate change, or energy transition, although the energy transition is two reasons: climate change and energy progress itself. But I believe this is a very unstable process must in the field, like, so gas still very, very important, especially different regions, different resources, different distributions, that kind of, this is my view. Thank you very much.
Thank you, Professor. I think we will go back to your comment about energy security and how it influences the energy transition. But for now, let's move on to the next panelist. So do we have Sam or Gen on the line?
So we haven't heard from him yet.
Okay, Rob. So you're next. Go ahead.
Yeah. Okay, thanks, Chris. I reserve the spot for me to ask questions to other panelists, including our keynote speaker and opening by Andrews. I have a few comments and questions about this. And the first is about the role of natural gas. Based on our discussion so far, it seems that we have a consensus more or less that natural gas will still have a significant role in the energy transition. This was, as Professor Yang mentioned, that in the IES publication that was roughly 10 years ago about golden age of gas. But IES had some backtrack on this assessment. And in particular, last year, I think we all know the discussion about the carbon neutral by the middle century and the very strike conclusion that in order to achieve the Paris goal, we have to stop investment for oil and gas from now on. So I think that's one of the broader picture. If I look from energy economics or energy policy research point of view, we will be always interested in that how to reconcile this kind of overall framing or discourse or story and the reality, as I think all the panelists and previous speaker all mentioned that gas are still needed, and even actually we are in shortage. But on the other hand, we have overall policy environment say that oil and gas are bad for our environment. We shouldn't do it. We shouldn't invest with all the things. How to reconcile this? I think that the issue I probably posted to Andrew and all our panel lists so far. And other actually three brief issue. One is about the investment. And I think Min also mentioned there is no FID for gas project, probably almost in the past 10 years. And now with the new developer or even the price signal already tell us that we need more gas. If we consider the gas market is the signal of the price showing the shortage. So how or where the investor will come from? That's another question I probably raised to my fellow panels. And I think the third one is about European, a lot of discussion about European moving away from pipeline gas and go for LNG. That means infrastructure. But there is a general debate in the economic policy literature about stranded assets, means that those assets from fossil fuel will be not useful or you couldn't get the profit back in the future. Assume that if European develop LNG receiving terminals, that probably take 5 years to build, and that lifetime will be another 20 years. So it means 25 to 30 years we will lock in with the infrastructure. So given this kind of debate and development, whether you think that the European will develop a significant amount of regasification capacity, if not, where the supply will come from, given the debate about the reduced import of pipeline gas. I think the last one I also want to highlight probably to Professor Yang is about China's policy recently more focused on the role of coal and energy security. I think that for China, probably they face gas supply security as well, given the gas dependency or import are significantly improved, and this kind of geopolitical issues development. And probably China think about coal, or more like coal was dominant and was supposed to be declined. but whether will be still the pace will be still as fast as in the past. So I think, Chris, for me, more like a risk question for our fellow panel to think about.
Yeah, thank you, Rod, for adding even more questions to the panel. But I think you summarized some of the issues and dilemmas very well when it comes to the role of gas and to see that this gap between some of the policies and what we see as the reality. But so maybe that's an opportunity, and given your last point regarding the role of coal and energy security, that's an opportunity for me then to go back to Professor Yufeng Yang regarding the energy security and how it influences the debate around energy transition. So, Professor, can you please comment on energy security, how it is reflected in the policies, and then, of course, the impact of on the role of coal, and whether the coal to gas transition is going to be delayed or not.
Okay, you know, China, India, we mainly still depend on coal, like this kind of very, very large population countries, and too much amount, and this is a large scale. I mean, for energy transition or fuel substitution process, it must be a slowly process. I mean, because very complicated different regions inside even every country. So energy security, I always think this is the first thing, because it's related everyone's life, you know. So like present Europe, some countries, for some special period, we have no choice. I mean, sometimes. So number one, for more developing countries, I mean, not only China, India, but also other developing countries, including in Asia Pacific, a lot of developing countries, I mean, coal industry, coal power generation, still very important, I think. And I believe it will last a period, even a longer period. But this doesn't mean we will forget the energy transition, the climate change. We can do everything, I mean, and put the climate forward. The clean fuels energy transition process, this is no doubt. This is also very important, I mean. So recent years, we always
so Professor, sorry to interrupt, but let me ask you this specific question. How do you see the concern or the topic of energy security being reflected in the current policy? And my question is whether energy security comes first or comes second to the energy transition agenda and timeline.
My understanding, just myself, I think in China, for the policies levels, I think it's consistent for us. The energy security and the energy transition process policies, they all together, there's no contradictions already, because our whole economic growth, we call it, you may know about this, we call it a high quality growth process for 70 years, you know. development. So the high quality means it's must clean energy and the transition and the climate change we concern also. Yeah.
Thank you, Professor. You know, at this stage, I'd like to call on Min. Whether, Min, you could react to Professor Naji's point, Dr. Naji's point regarding Qatar's limited availability in the short term. But during your presentation, you also mentioned that there is not much new addition before 2025 anyway. So when you consider the global demand, do you see LNG having an increased role or not?
I mean, in terms of the, I think we are essentially talking about the elasticity of LNG demand, right? Like, given high gas prices, do you still have high LNG demand? I think that's a fundamental question. I mean, from my perspective, I think it varied for different countries or markets. So for places like Japan and Taiwan, you rely on imports for everything: coal, oil, gas, everything. And nuclear, especially for Japan, doesn't seem like a short-term solution. Like, I mean, personally, I don't think Japan would just restart a bunch of nuclear reactors in the next 1-2 years. So they will still heavily rely on imports for both coal and gas. And similar for the Taiwan markets, I don't think they have much like other choices beyond coal and gas. So for those markets, I think they have little elasticity, meaning they will keep buying at whatever prices.
But that means that you do not expect, or you do not account for any demand destruction resulting from this high gas price environment over a sustained period, or do you?
In the short term, I do not expect demand destruction from markets like Taiwan and Japan, but I do expect demand destructions from markets like with higher flexibility, like South Korea, if they can burn more coal, and also they will add more nuclear reactors this year, next year, in the following years, so they have more flexibility in their power system. For Japan, because as I said, I don't expect they will just ramp up and restart a bunch of nuclear reactors. They will restart, I think 2 to 3 nuclear reactors next year. So that will help like reduce the needs on both gas and coal to a certain extent. So at the end of the day, for Japan and the Taiwan market, it's more like which market is tighter? Is it coal or gas? Because they will need to rely on thermal generation to an extent. So if coal is cheaper, they might buy more coal. And if coal is not available at all, they will have to buy gas. So that's for the short term. Short term speaking, I think China is a different story. They can turn to more pipeline gas imports. They can turn to domestic production, and to some extent, do the what we call demand side management, which is essentially demand destruction to a certain extent. So I think China definitely has more levers to pull comparing with other markets. So
basically the return to coal, as mentioned by Andrew, is already happening. It's already there.
I won't call it return to coal, because coal is still a very big component of Chinese energy mix. China will not give up renewable development, that's for sure. And I think to the quite opposite, China is accelerating renewables developments, but they won't just give up coal overnight. They will still need to burn coal. And I think increasing domestic coal production is part of that strategy, right? You still need to use coal, especially when you have a higher renewable penetration in your system. You will need some idled coal capacity to just balance the power market. And given the current prices, like both for coal, both for and natural gas, I think the Chinese governments are incentivized to ramp up domestic coal production. Actually, I think just in Jan and Feb, domestic coal production, I think increased by like high single digit year on year, 7%, even like higher than that. I think that's just a reflection of the kind of top-down strategy. I think it's really the 3 points of the triangle. You have energy security, you have green, like clean energy, and affordability as well. So you just need to carefully balance where you want to go.
So given this basically dynamics playing at the moment, why would investors still fear the risk of getting stranded assets? Because it seems like the next investment cycle is pushed back for as long as the current tightness lasts.
Upstream, like capex for coal, oil, gas.
Yes, Rock mentioned of course that if we get rid of gas, it's if policies are basically emphasizing the exit of gas, it's not a big incentive for investors to develop new assets for the risk of getting stranded assets, which would not go through their entire amortization cycle. But given the current situation here, I just wonder whether this concern is still current. Is it still valid?
I mean, the other panelists and speakers may have a better idea on this, but from my side, I think upstream capex on coal and oil may be a different story than LNG. I think most of the banks can still provide finance to LNG projects. But I think the thing is, are there many financiers can provide support to upstream gas production? I think from time to time that's kind of associated with oil investment as well. I don't see big problem like in terms of financing LNG projects, but where you can get your feed gas from, that's an issue as well.
Yeah, excellent point. Thank you, Min. Now we have Sam Muraki from Tokyo Gas. Can I give you the floor, Sam?
Sorry for my delay to participate because of the trouble with my computer. I changed my computer and finally I joined. Yeah, this is indeed a challenging time, and it is getting more difficult to predict global natural gas and energy market. And the global energy demand will increase by expected large additional demand in Europe. However, if you look at an Asian demand, will rather decrease due to the high prices impacting demand in India and new potential markets in Southeast Asia, and shifting to renewable energies and restart of the nuclear, particularly in Japan and China, possibly increase the natural gas offtake through pipeline from Russia. And if it is the case, Chinese LNG demand will decline. China's strategy on natural gas and LNG has a big impact on the energy market in Asia. Regarding the sustainable development of natural gas and energy supplies, long-term perspectives and long-term commitments, as well as the support from the financial industries are required. Currently, financial industry is becoming reluctant to invest fossil fuels. So this is a big concern of the natural gas industry. For those challenges, in addition to the efforts to develop the natural gas, traditional natural gas and LNG supply chains, natural gas industry need to show the potentiality of natural gas to supply clean fuel, utilizing CCS technologies such as blue hydrogen and blue ammonia. Those efforts might draw strong attention and interest from the energy and the financial markets and maintain the sustainable development of natural gas supply sources for both traditional and the clean supply chains. Development of the blue hydrogen and blue ammonia supply chains are moving and starting soon. Particularly, commercial use of clean fuel ammonia will start in few years' time around 2027. Discussions on the blue ammonia supply chain are underway from US, Canada, Australia, and Middle East countries. This is an important challenge for natural gas industry to maintain its role towards decarbonization. That is my short comment.
Thank you very much, Sam. But so you also raised the concern for the natural gas industry for new gas investment.
Yeah, I think so. And
but is it really the case? My question is it still the case in today's environment?
Yeah, today's environment will change a little bit. However, for instance, before this crisis happens, and EU Commission included the new gas turbines and nuclear power plant. However, in that case, even in that case, they have limitation or they have targeted carbon dioxide emissions 270 grams per kilowatt hour. So natural gas combined cycle cannot reach that level. So they have to combine with the CCS, or they have to have the hydrogen into the natural gas to use the combined cycle. So still EU has the strong intention to move to the green. However, at this moment, probably they will review the policy and the strategies. It could be possible to change a little bit. However, if you look at the recent EU Repower EU report, their ultimate goal is to move from reduce the dependency on the fossil fuel and accelerate the development of the renewables and hydrogen.
And I mean, this is a topic we raised before you joined the call, the topic of energy security and how it influences the energy transition agenda, or how it plays, how it is reflected. How do you think energy security is taken into account by those policies? You mentioned the EU policies. Maybe take the question.
Yeah, I think it's that situations will be different by regions: Europe, US, and Asia. Asia, most of the Asian countries do not have the dependency of the indigenous energy sources, so they have to import energy sources by different measures like oil, gas, and renewable hydrogen. The Asian area need to. And also Asia has a lot of coal power plants. So I think still the fossil fuel sources are is essential for the energy security in Asian countries. So we need to change the strategy of the international financial finance community to change the policy and increase the investments or continue the investment to the fossil fuel resources.
So this is for Asia, you mean?
Yeah, this is Asia, particularly.
And do you have any perspective on the other regions? Because you mentioned that, of course, this topic is probably has a different flavor region by region.
Yeah, I think it's in EU, as I mentioned about Repower EU and published in early March. So the target is to develop the renewable resources. It's an indigenous resources in Europe because they have a potentiality to develop the renewable resources in that region, and they have a very good grid connections and pipeline connections to share those renewables in that region. If you look at the US and Canada, they have plenty of natural gas and resources, and also they have a potentiality of the renewable resources in that area. So they can increase the dependency of the indigenous energy resources by themselves.
So what do you expect would happen? Because you mentioned the need for basically continuing to fund new fossil fuel based energy generation projects for Asia. But what happens if nothing is changed? You know, you say we need to change the policy, but what happens if the policy is not changed?
What I'm trying to say and what I'm trying to promote is that natural gas or possibly oil as well can produce the clean energy sources from fossil fuel. So the development of the fossil fuels can contribute to the decarbonization in the energy market. So I think that in the transition, of course, we need to continue to secure the supply of LNG, natural gas, and oil. But gradually that demand or that requirement will be declined and switched to the clean energy sources. But still, in that transition, natural gas can continue that role. So that kind of scenario, we need to show to the energy community and financial community. That is what I think that one of the key challenges we need to address, or we need to develop.
Thank you, Sam. So, you know, Rock, in your previous statement, comments, you said that there's probably consensus around the role of natural gas, and that role being significant for the energy transition. But that consensus is more within the natural gas industry itself. Or did you mean that that consensus included global policymakers?
I think that should be included the global policymakers.
Yeah, my assessment is that it's probably currently with natural gas community, and among our panelists, But as I mentioned, as a policy research point of view, we see there's a gap. As Marakis mentioned, it should be with the policymaker, but probably is not there. But I guess Andrew and others in the business will feel this more strongly. But for us as a research, we stand aside and look at the situation. We are confused. As we mentioned, on one hand, we say that we actually shortage of gas supply, at least for the next 5 or 10 years. On the other hand, we get a message saying, no, it's very bad. Oil and gas is against the global effort of climate change. We shouldn't invest, we shouldn't do it. So that's it. I think probably even Chris yourself as an expert and basically Europe probably also give you comments on the European situation, given the current need of more LNG supplier and stranded assets and supplier. But I think you and Andrew in the business probably will have more strong view on that. Yeah.
Well, anyway, that's a topic, that's a recurring theme, and I just wanted to, of course, to sound you because this is something we discuss, but somehow it leaves an impression that there is an underlying gap which may not be bridged somehow, and then the question is, how is it going to play out? But what I would like to do now is to go back to one of your comments, Andrew, earlier, when you said basically that you felt that there was a paradigm shift on the gas market, and you mentioned the main disruptors, the disruption factors in that respect. And you know, if I go through the 4 factors you mentioned, one being the pandemic in 2020 and the effect on the global demand. The second one being the rebound of gas prices in 2021, and more lately the conflict in Ukraine. The last being the energy transition. But if you look at certainly the energy dynamics recently, would you really say that they are resulting from a different paradigm or from a different way the market is operating, or simply they are just reflected the way energy works, i.e. being attracted to the highest, basically, I mean, flexible energy being attracted to where the demand is the highest, and long-term contracts being locked into locations, destinations, under long-term contracts. So would you please, would you want to elaborate on what you really think is different from the way the market operates today? Because apart from the energy transition agenda, I can only see the energy flows just reacting to the current market environment. I can't feel a different way the market would be assessing, processing, and making decisions. Or am I missing something?
No, and full marks for paying attention to my opening comments, Christoph, and noting my four items. Well done. I think, I mean, you have a point well made, and actually, when I kind of used paradigm shift recently, I've kind of been quite Europe centric, because I think there's been a real paradigm shift in the relationship between Russia and Europe. For a long time, there's been an Ostpolitik in Germany, which is we should trade with Russia. It's better if we trade together. That has completely shifted, and there's been a paradigm shift from Europe, from Russia as a major energy provider into Europe, and it still is providing energy despite the ongoing war. But there has been a philosophical change, a paradigm shift in the extent to which we should, philosophically, or can rely on Russia as an energy provider, both for gas, but also in future as potentially a hydrogen or provider, and our ability to deal with Russia as a regime. If we widen that, I think you're correct. Most of the other things I mentioned are perhaps not paradigm shifts per se, but they create uncertainty in terms of the overriding factor, the energy transition. And I think that was already complicated from the fact that it's different in different sectors. Gas is a multi-sector fuel, and that creates questions, what is the best solution by sector, from industry to residential to transport, etc. And then it's different by different region. As you're well aware, Christophe, different markets are at different stages in their kind of energy evolution. And my kind of 3 pillars basically go from left to right in terms of development of the market or maturity of the market, coal to gas switching, underpinning renewables, and then low carbon fuels, platform for low carbon fuels, is kind of as markets mature. And different markets, India in a different place to China to Europe, different to the US. Everyone has a different mix and are in different places. So that already made it a complex solution. I think what the current, and what I was observing is that we've seen the challenge of kind of balancing ambition versus reality, pragmatism. And I think, as Min kind of pointed to earlier, there's an energy trilemma here. It's not just sustainability, it's affordability, it's security of supply. And you've got to manage all of those. Otherwise, you're going to have a very unstable transition. And I think our objective here is a smooth, well-managed energy transition that gets us to a point where we have reduced the impact of energy on climate to the greatest extent possible. But we have, as I said, a smooth, well-managed transition. And I think part of what we're seeing at the moment is a reminder that it's a trilemma, and that we've seen certainly from the price crisis, from the Ukraine-Russia war, we've seen a reminder that you've got to manage both sides of the equation. You've got to manage the growth of renewables, but you've also got to manage the existing fuels. You can't just wish them away and wish that we are a fully, decarbonized energy system. It's going to take time and effort and complexity to do that. So I think when Rock indicated earlier, he quoted the IEA suggestion that we should stop investing in oil and gas exploration, production to get to net zero. Actually, they didn't really mean that, because I think if you do stop investing, then you're going to have a very bumpy transition, and bad things will happen in terms of security of supply, in terms of demand destruction. Actually, what they meant was, if we are able to get to net zero, then we wouldn't need to do this. But net zero is not it is not a kind of indeterminate variable. You've got to work to get there. So actually, I think the current events, the price crisis, the potential, the potential real supply crisis for Europe that we would face, an unprecedented crisis if Russian gas were to be curtailed, we would see something the like of which in energy we've not seen since probably the 70s in terms of petrol rationing, etc. That is a big reminder that there is a security and affordability piece here that you have to manage. And we've seen a reorientation of the narrative, particularly in Europe, to worrying about security of supply, worrying about affordability, as well as sustainability. And I think that's the big tension I see here across this, is the rising pragmatism. You've got Germany, who were leading the energy transition, the energy vendor, in Qatar, asking about how they can get more natural gas into the German market. So I think you're seeing rising pragmatism and increasing ambition, and how that gets balanced and managed, I think, is going to be interesting. I do feel that there is an increasing pragmatism in Europe which we kind of had already seen in Asia. Around COP, we saw a big push, certainly against coal. That was one of the successes of COP, I think, but also a question about the role of gas. And there was a slight pushback from Asian markets in terms of the necessity of gas to balance the equation in terms of affordability, security of supply. So I think there are lots of paradoxes, tensions in the current dynamic that are raised by this. So to come back to your key point, the energy system has a finite amount of supply, certainly near term, and a finite amount of switchability in the system. So if you have a fundamental short, particularly low supply from Russia into Europe, or even a curtailment of the 150 BCM, and a reminder that Fukushima, as Sam would indicate, was a curtailment of the equivalent of about 30 BCM, 20 million tons of LNG was swung into Japan over the next 2 years. So 150 BCM energy curtailment into Europe would be, four times the Fukushima impact. So that would be a big impact, which is why Europe is worried. So there is a finite amount of energy switchability that you allocate into the markets, and prices dictate where those volumes will go. To some extent, I have a suspicion Europe is able to pull volume at the moment because Asia doesn't need it as much as it might have done had we had colder weather in Asia. Because there is a lead time to build new LNG, to build new gas infrastructure, which we can do, but that's a 5-year time horizon, not this winter time horizon. So I kind of agree with you in your assertion that some of this will just dictate how the current pie is split. I do think there are potential changes in terms of government intervention, in terms of a switch in terms of market mechanisms in Europe. Are we going to see the return of long-term contracts in Europe? There are questions about how the market works within that allocation and what you can do to increase your size, your share of the pie, I guess. So
thank you, Andrew.
A lengthy answer, but it's
a great point, and agreed that this paradigm shift is probably clearly relevant to the EU and the way dynamics may be playing from now on, or at least for a given period of time.
But it's a global system, and the ripples go worldwide. That is the reality of a global system. What happens in Europe will impact markets, other markets via the LNG, trade flows.
Yep. Do we have questions from the audience at this stage?
Yeah, Chris, there is one question in the Q&A box. There is also another one raised hand in the attendees. How should I proceed?
How do we take the who raised the hand? Maybe we should.
Yeah, that probably you might allow him to talk. I think it's Terry Bros. Okay. Hey, Terry, can you talk? I think we already give you access. Yeah, thank you.
Okay, good morning or good afternoon. One comment, one question. I'm not completely convinced, Andrew, that pragmatism is prevailing in Europe. I mean, it's not because the energy minister of Germany goes to Qatar that things change. I mean, the same energy minister is still wishing to close these nukes. So, I mean, I think the crisis hasn't been hard enough so far for pragmatism to prevail. And the question is, finally, the question to me, I mean, if we take Andrew's scenario or Andrew's worst case scenario, where we have a cutoff of those 150 BCM of Russian gas today, what are going to be the impact? Do you have some broad view on your model? I mean, as Andrew was saying, it's 4 or 5 times of Fukushima. So how is this going to impact the global system, and what does it mean for energy security and prices? Thanks.
So who wants to take that one?
I'll just make a comment, Christophe, as Thierry mentioned, or challenge one of my observations. I think everything's relative, Thierry. I think we're seeing a relatively more pragmatism. You could argue that it started from a fairly low base, but we could debate that offline. But certainly where we were prior to that. But and then I think the simple answer is that would be a major energy crisis. If there were a major curtailment, I think we would see rationing of gas in Europe, rationing of energy, rationing of gas in a way that we haven't seen since the 70s. Some of my Dutch colleagues were reminding me in the 70s, they had a no drive Sunday at one point in Holland to save fuel. I think we would see energy bills go up. I think it would be even more than they are at the moment. And I think to some extent, we've yet to see the high prices play through into the market in terms of industry and residential because of the lags, the lead time in terms of passing prices through. So I think this would be a major energy crisis if it were to happen. So I have my fingers crossed that it doesn't, but I think that has focused Europe into a more pragmatic mindset, even if, as you say, it may not be fully pragmatic in terms of the views of ourselves in terms of the gas industry.
Thank you, Andrew.
Maybe just one question. I understand that the question from Thierry was for Min, or is it correct, Thierry?
Yes.
Yeah, Min, do you have the clue for the?
First of all, we don't build in a complete part of Russian pipeline gas in Europe into our balance, at least for this year. We think it's not quite likely a scenario, but if it happens, like we don't build in 150 BCM from Russia this year, we build in like 120, 130 BCM from Russia through pipeline to Europe this year. So if we lose all that, I think we have done an analysis on what would be the impact on European GDP growth, because we think Europe will lose a few percentage point in terms of GDP growth. So I agree with Andrew, in that scenario, we will see gas rationing across Europe. So I think residential households, commercial will still have the highest priority in terms of gas rationing. And I think Europe will start to look into the industrial sector. I don't have the exact number off the top of my head, but I think if you could drop 70, 80 BCM from industrial sector, because rationing gas means your power demand will be lower as well. So I think if the extreme scenario happened, you will just look into cut industrial gas demand and with a lower power demand as well. I mean, on a related but separate note, I think at the end of the day, it's kind of Europe will offshore some of their industrial production to a place where energy prices are the lowest globally. So at the end of the day, I think it's really a global, it has a global implication. I think it could be Europe can offshore some of their industrial production to the US, given the lowest energy cost. So that could be a solution. But I mean, as I mentioned, I don't build in a complete halt of Russian supply to Europe in my balance. I think if that happens, we will just see TTF skyrocketed.
All right, thank you, Min. Rock, are you going to answer the question we have in the chat box? You're on mute, Rob.
Yeah, this question is actually from our audience through our broadcasting. So ISETS support members chatting here. So I probably leave the other panelists to answer. I think the questions are about science, both coal and natural gas are fossil fuels. They will have some destination which is a lot of optimism in the carbon neutral world. So what is the additional uncertainty for natural gas when compared with coal? Yeah, so I leave the other panelists to answer.
Okay, I'll try to
you want me to read the question again to you guys? Okay, so
yeah,
after the carbon neutrality target was proposed, not only the coal industry felt pressure, as a kind of carbon energy, the future development of natural gas also faces some uncertainties. Compared with coal energy, what are the specific uncertainties?
Yeah, I'll try to answer. And I think it's a natural gas still, it's a low carbon fossil fuel, and switching from the coal on oil to natural gas can reduce the carbon dioxide emissions. So that is a transition. However, if you look at the current situation and also the additional supply sources, development of the additional supply sources of natural gas supply takes time and investment. So those new supply sources needs to secure the mid-term to long-term market for commitment. Otherwise, it is very difficult to launch the new supply sources just for the additional demand in the next few years. So that it could be the struggle that the natural gas industry, how to develop the traditional sources, and in addition that the natural gas industry can, as I mentioned, can develop the new clean fuel resources, but it will take more time to develop. So that will be the struggle of the natural gas industry. But I think that the natural gas industry can maneuver into this and difficult challenge and continue the development of the industry and supply of natural gas.
Thank you, Sam. Do we have any other question from the audience?
Yes, we have Ashutosh Shastri. Ashutosh?
Hi, I have a very quick question really in the current light of where we are in the gas prices scenario in Europe. And my question actually is directed to Muraki-san. We know that Mitsubishi has very recently trialed a 40 megawatt ammonia project, or the trials are kind of being quite successful. How do you see, repurposing of existing coal-fired plants with ammonia? I see. Okay. So when do you see, ammonia getting commercialized? Given that this, high price environment is not likely to be a short-run one. Thank you.
The Mitsubishi, it's IHI and JERA is now in the large-scale demonstration, use ammonia 20% mix in 1 gigawatt power station. And the JERA is planning to start the commercial use of ammonia into the coal-fired power plant in 2027, in 5 years' time. And then it will be expanded through the coal power plant, and then extended to the gas turbines, mid-sized gas turbines, and the combined cycle gas turbine in the 30s. So ammonia supply chain utilization in energy market will start in few years' time and will expand in Japan as well as in Korea. And also the Japanese industries and the IHI and MHI have the feasibility study project with the Tenaga in Malaysia, PLN in Indonesia, and Adani Group in India. So they are looking at the possibility to use ammonia into their existing coal power plant to reduce the carbon dioxide emissions.
Thank you so much.
Any other question? You know, I cannot see the raised hands actually. So I don't know whether there are any more.
Yeah, so far there are no more raised hands. Yeah.
All right, so maybe we can, maybe it's time to draw the panel to a close. So what I'd like to do is maybe give each of you the opportunity to make final remarks. Who wants to go first? Yeah.
Yeah.
Dr. Sen.
Yeah. Hello, Christoph. Thank you for this chance. And also, it's a great honor to hear so many speakers give the excellent comments. And I feel that full of information. And I also, for my conclusion, for some comments for this end of the meeting. And I feel that one of the issues is about the security, the energy security issue. Now, just now, you have a lot of discussions. I feel that is the perfect subject for today's meeting. And I feel that for the developing countries, especially for the country like China, India, Japan, Asian, these countries are much relying on the import of this, either for crude or for the LNG. And of course, Andrew is happy. And for Synergy, they like to have more the export to these countries. But for the energy security, the part of the view, I feel that should be a balance. And just now, Professor Yang also talked about the energy security policies. I feel that by this one, and the China and Europe now make a big efforts to try to develop the renewable energies. I feel that is one of the way in the future, not today, not at the short term. So for the short term, for China, for these much rely on the import of the energy, and it's a balance, yeah. And for the crude, and just now mentioned that the IEA mentioned that stop the investment for the fossil fuels, the means for coal, for oil, for gas. And I feel that is a little bit too fast and early, especially for gas. And now stop the investment for the gas, I don't think it's right. Yeah, so it should be some time. And even by 2060, the gas still play an important role, non-replaceable role, and either for the fuel and also for the chemical. So I think that this is my comment. And of course, the country like China for energy security is balanced. And of course, China is a big producer of coal and now largely reduced. Now each year reduce about 1.5%. So even greater steps to further reduce. However, this can be used as a backup if some emergency happens, like this time in Europe, and diversifications from Russia, and then no choice. And even some of the people start to use the wood. And if you balance for the oil, for the gas, for LNG, for the water supply, and also for the nuclear, and for the geothermal source and others. So by this one is the balance policy, I think may be better for the energy security. So that's my personal comment. Thank you.
Thank you, Dr. Sen. So too early to stop gas. Noted. We have Dr. Naji had to leave early, so he's already gone. Sam, you wanna make your remark?
Yeah, and it is becoming the very complex situation, and for the energy trilemma, like Andrew mentioned, plus decarbonization, I think it's natural gas will continue to take an important role, particularly role of LNG will become more important because of the flexibility of the transportation and trade of natural gas. And then, as I mentioned, that the natural gas can produce and clean energy supply using the CCS technologies. And so I think that the natural gas will continue to support the energy market even through the 2050.
Thank you, Sam.
Christophe?
Yeah.
I just want to make a follow-up on what has just been said. I think it is a role of our industry as well. I mean, energy utilities, energy industry, gas industry, to raise our voice to our politicians, to the international organization, to say that it's time to continue the investment if you want to secure our energy. This is our role as well. And that's what we did at the Global Gas Center last 10 days ago at the UN in New York, because I think it's time when we talk about investment, this is our role as well to say to our to the outside community that gas is needed for just to make things move in the industry. So this is something that we all have to do collectively, and we don't have to be shy. That's very important. And this is a strong signal that I raise here, because when we hear all of you, you are all saying the same things. We need gas to come to the journey of the energy transition, and it doesn't mean that we will, and we need all kinds of energy. So that's a very strong message that I share with you here. You have the floor, Christophe.
Thank you, Valerie. Gas advocacy, yes, it remains the primary role of our own industry, of course. Min, is there any comments you want to make?
Yeah, sure. Just some last points. I think the first thing I'd like to say is really affordability, because it will be a pressure test this year. We started to see less interest in spot LNG buying from Asia when prices surged about mid-$30 per MMBTU. But Asia is pretty much covered by oil-linked or Henry Hub-linked long-term contracts, which are definitely much cheaper than spot at this point. So, I mean, we will need to see if the Europe buyers, Asia buyers will keep bidding up the spot LNG prices. That's the first thing. The second thing I want to say is really a follow-up of affordability, because high gas prices will definitely have implications, long-term implications. First of all, we have already feel or see the pretty scary inflation numbers. So sustained high energy prices will just add a different layer of pressure to inflation. And that will definitely have implications on every industrial sectors. And the second thing is for some of the less developed countries, like South Asia, like some countries in the South Asia and in the Latin America, high gas prices, like $30 per MMBTU, is not sustainable for them to keep using natural gas. So I think that will require some global cooperation, not just kind of down to individual countries, on like how to deal with the high gas price environment. And the last thing I want to talk about is really about the energy transition, because we have kind of heard the discussion on energy transition. Are we going to back to coal, or are we going to accelerate energy transition? I think it's quite clear that it seems like the consensus is we need to accelerate energy transition, not really kind of backwards to more like oil and coal. I think that's a consensus I get from today's discussion.
Thank you, Min. Andrew.
Thank you. Yeah, well, one thing I'll just comment on Rock's comment that Cheniere is happy at the moment. A reminder that we sell our LNG on a structured long-term basis, on a cost-plus basis. So the prices we are charging our customers look very, very attractive, and we're very happy because our customers are happy. And actually, there's a serious point there that actually high prices are not good for markets. They're not for customers. They're not good for suppliers. You know, we prefer a market that's in balance and in which gas is affordable and in which customers see it as a fuel of choice. I want to just kind of support what Valerie said. I think we're in for an interesting time. I think Min talked about some of the uncertainties as we go through the coming years in terms of price, in terms of supply, in terms of government intervention. I think, but in all scenarios, gas still has a meaningful role over the next 2-3 decades. And we have to keep reminding governments that. I've heard the European Commission say those exact words. Gas still has a very significant role in the energy mix in the European market. Not only do we have to remind them that they're saying that, we have to remind them that if that is the case, you need to manage it. You need to manage it in terms of policy. You need to manage it in terms of support, fundamental support for gas as a fuel. Some of the problems Europe has is because their buyers haven't been supported in terms of investing in infrastructure, investing in contracts. So I think we have to keep advocating. We have to keep reminding governments that you can't just ignore this part of the transition. You have to manage it. You have to pay attention. You have to make sure that it is there for as long as you need in order to have a managed, smooth transition. Back to you, Christoph.
Thank you, Andrew. I think, Rock, is there any final comments you would like to make?
Yeah, probably for me, I would just also, as more like a last comment, and I will leave the last word to Valerie to conclude session. I think as to my understanding, we probably identify at least 3 gaps which need further works to fill those. The first one is the market gap. We will discuss there is a supply and the demand gap. There is a need of investment. So this is the issue actually faced by the industry and the broader community as well. And second, I would say there is a policy gaps, like the energy trilemmas highlights by few speakers. Apparently, there is a currently for policymakers that face the hard balance between energy transition as well as natural gas development, and as well as natural gas development and energy securities. I think those issues are coming together, particularly given the current development in the European. I think they're quite interesting and uncertainty time. Let's see how the policy gap will be filled. And the third gap I would say is there is a cognition gaps. Apparently, even understand the IEA comments for us working in the industry, we know is a lot of the realistic, but there are other group of people who think that is the way to go in the direction. So you will see that when you look at the investment environment for oil and gas companies, quite challenging time. So I think there's a cognition bias among people from the environmental side and energy side and others. In the future, hopefully, I think at the platform like ISETS, we strive to build more opportunity for dialogue for various group of people to come together to seek practical solutions that can look after our economic environment as well as the energy security issue. Yeah, thanks, Chris.
Okay, thank you, Rock. Valerie, I'll give you the floor in a minute. I just would like to thank all the panelists, all the speakers.
Oh, hi, sorry, so Professor Yang Yufeng, I think, yeah, if he's still here.
Oh, we forgot it?
Yes, I'm here, yes.
Oh, sorry.
No some comments. No some special comments.
Okay.
Very pleased. And we can follow up and follow up this topic. Very important. Thank you all very much.
Thank you, Professor. So yeah, I mean, so I wanted to thank you. Thanks to the speakers and panelists. I think we'll take away the need for the dialogue, to continue the dialogue, the advocacy of specificities of our industry. And you know, we mentioned, we talked about policymakers, we talked about the gas industry. Of course, there is one voice missing from this discussion. It's the voice of the people, the people who expect to have the energy they need, who expect to have the energy they need into their economies, and we shall not forget them. I'm not sure that they would always concur to the policymakers' inclinations, but that's another totally different debate. Valerie, I'd like to hand over to you for the conclusion of the session.
Thank you very much, Christophe. Very well done for the moderation of the session. I would like to thank everybody, the participants, the speakers. That, as always, a great pleasure to hear all of you. And I think our discussion is very useful. More than ever, we need dialogue, we need cooperation, we need to understand each other. We need to, one word that Min pronounced several times, affordability. I think it's all, and just as follow-up of what you mentioned, Christophe, it's very important. We need our industry to first raise our voice, say that gas will play an important role in the future, and we need to interact with each other in a peaceful manner as far as we can. And I hope to continue the dialogue because I think it's very useful, first among us and then to the politicians, to investors and to the citizens for sure. So all the best to you. Let's continue and thank you to all of you. Bye-bye.
Yeah, thank you. Also, thank you the support members for our live stream. Yeah, see you next time.
Bye-bye. Thank you.
Bye-bye.
Bye.
Bye-bye. Bye-bye.
Bye.